allowances. In the previous class, we discussed fully taxable allowances under both regime, whether it may be default tax regime or maybe optional tax regime, whatever it may be, fully taxable. Some allowances are exempt under optional tax regime only. In case of a default tax regime, you have to pay the tax. Is that okay? Now, let's see allowances exempt under both the tax regime. Is that okay? What are the allowances are exempt under both the tax regime? Whether you choose the default tax regime or optional tax regime, doesn't matter. You have no need to pay the tax. It will not be considered as your income. Where the allowances offered to the citizen of India, the employee being the government employee and the payment is made by the government, where the service is rendered outside India under section 10 clause 7. Already I referred this along with the deemed to accrue or arise in India concept, section 9. Any employee being the government employee rendering service outside India for the Indian government, like embassy services or other services. If they do any services, the salary payable by government of India for the services rendered outside India by an Indian citizen, naturally it is Indian income because deemed to accrue or arise in India. But any allowances given, no, that will be also Indian income but exempted specifically under section 10 clause 7. Is that okay? So, India, government of India, Mr. A, who is rendering service outside India, for that the payment is given by government of India, maybe USA. A may be working in embassy of India in USA. Government of India offers him salary as well as some allowances offered. A rendered service outside India. Naturally, the accrual place is outside India. Payment also available only outside India. Payment accrual both will be outside India. But the payment is done by Indian government and for the services rendered for Indian government. Naturally, it is considered as deemed to accrue only in India. Accrual outside India, received outside India, but deemed to accrue only in India. If the income deemed to accrue in India, automatically it is Indian income. Whoever you are, it should be taxable in India only. Whether you are ROR, RNOR, non-resident, doesn't matter. If it is being the Indian income, it is taxable under Income Tax Act. This we referred already under section 9. And not only salary, allowances may also be offered. In that case, this allowance is exempt under section 10 clause 7 specifically. We have already referred that section 10 is related for exemption, a set of exemptions. Of course, you don't need to mug up all the exemptions in the very first instant. It will have a lengthy list. Now and then one or few items may come and you remember that. Gratuity also under section 10 to a certain extent. And leave salary, pension and all this case, commuted pensions, I referred section 10. So section 10 has a big list. In section 10 clause 7 gives exemptions for the allowances received by an Indian citizen rendering services outside India where the allowances received from Indian government. That will be totally tax free. Whether it may be default tax regime or optional tax regime. Default tax regime is nothing but as per section 115 BAC. Optional tax regime is nothing but shifting out of 115 BAC. Is that okay? See, this optional tax regime may be applicable for one more year. That's all. Thereafter, we don't have the optional tax regime. Clear? If any provision may be removed in due course, will have least important for your examination purpose. Okay. Anyhow, it is going to be vanished. The moment you complete your CA, this will be no more applicable, right? So usually the questions may be very lesser in this aspect, optional tax regime. So main focus will be only 115 BAC. Is that clear? That's how you can have. Any corrections and any updations is there. No, you can expect more questions on that. Okay, not here, not here. Anyway, just have the idea. At least one more year we have this optional tax benefits. So these two. Apart from that, apart from that, these four allowances will be considered as exempted under both the tax regime. One is allowances given by the government of India for services rendered outside India by a citizen of India. Citizen of India. So here I use the term citizen of India, not being residential status. We never bother about the residential status. Citizen is nothing but he has a citizenship in India. Usually by birth we will get the citizenship, right? So then you can go to other country where you will get the citizenship. There are also no issues. Dual citizenship may also be available some cases. So being the citizen of India, getting the allowances from the government of India will be exempted in both the tax regime. Apart from that, four allowances will be totally exempted under both the tax regime, subject to some condition. These are the four allowances. These are the four allowances. Traveling allowances, daily allowances, conveyance allowances, transport allowances. These are the four allowances are totally exempted. Of course, there is a limit. To that extent of limit will be exempted under both the tax regime. Under both the tax regime. Daily allowances is nothing but where the employee is temporarily posted the location where he is not usually staying. Probably Mr. A working in Trichy, suddenly he was transferred temporarily for a couple of weeks to work in Kerala. During his stay there, he spends more money, no? So he gets an allowance like staying, food and other thing. That is called daily allowances. Additional duty he performs totally in a different location. And suddenly he may be shifted from Trichy to other state, Tamil Nadu to other state. So your posting will be confirmed that you have to shift yourself from one location to the other location. Then shifting will be usually costly. You have to transfer all of your house property. You have to vacate here and you get a new means place there. All of your equipment should be transported and your family may also be shifted. So in that case, the employer gives some offer, some allowances to shift. That is called traveling allowances. Traveling allowances. Sometimes the traveling allowances may be offered for temporary travel also. Transfer allowance as well as traveling allowances. Hope now you'll be able to understand. And conveyance allowances. Conveyance allowance is nothing but any additional duty you do for the employer in addition to the regular employment. For that you spend some extra money. You can get the amount reimbursed from the employer. That is called conveyance allowances. While working, the employer asked you to parcel some item and deliver it to some other location. So you booked the auto and you took the parcel and delivered the other place as per the employer's request. It's additional to the regular work or maybe part of work. While doing so, you get some helpers help also, assistant coolie, and you pay some money for that. Whatever the spending you do for performing the official duty, for that if you are getting any benefit from the company, that will be called allowances, conveyance allowances or reimbursement. It's a matter of reimbursement only. These three allowances are merely reimbursement. Allowances minus spending will be taxable amount. If the allowances you receive for these purposes being 100, you spend 120, taxable amount being 0. If you get the allowances 100 but the spending is 80, then 20 rupees is taxable. Negative, we never bother about that. So if you get any extra benefit because of these allowances, beyond the amount you actually spend for that specific purpose will be taxable allowances in your hand. Clear? Hope now you'll be able to understand this one. Traveling, daily and conveyances, allowances in all these three cases. Clear? Here is allowances exempt up to actual spending. Actual spending. Traveling and transfer to meet the cost of official tour or transfer expenses. Conveyance allowances to perform official duty. Daily allowances is nothing but during the transfer or tour to meet normal daily charges as you are staying outside. To the extent of actual expenditure will be totally exempted from the allowances. You can subtract from the allowances. Balance, if any, will be taxable under both the tax regime. Under both the tax regime. This is one set. And you have to understand, we have been given a list of allowances under section 10 class 14. 10 class 14. Okay. Under section 10 class 14, we have been given a list of allowances. A list of allowances. Okay. Here, allowances what you receive are the amount specified under Rule 2BB. Rule 2BB. Right. Income tax rules. Okay, already I explained what is called income tax rule. Sometimes for the calculations, you have to depend on the rules for the clarification and calculations purpose. Some additional details will be available for convenient procedure to apply all those provisions. Clear? So, Rule 2BB. You have to be master with the Income Tax Act, France Act, as well as income tax rules. To understand what could be the extent of this allowance is exempted, go and refer the income tax rules, where under rule number 2BB, they have given a set of amount to be considered as exempted. It is not based on the actual spending, it's based on the amount specified under rule number 2BB. Whatever the allowances you receive mentioned under this will be exempted to this means number given in rule number 2BB. These are called special allowances. These are called special allowances. In these special allowances, these four are totally different. These four are totally different. Beyond that, leaving other things, so you know, that will be totally taxable under default tax regime and exempted under optional tax regime. Is that clear? To this extent. To this extent. So, section 10 class 7 is different. That's nothing but the allowances given for rendering service outside India. Okay, for the Indian government. That will be totally exempted under both the tax regime. But we have been given a set of allowances to be exempted under section 10 class 14 named as special allowances. In that special allowances, you block into two blocks. One is all about these four. Rest of the things will be available again. So, we'll be discussing all those things now. So, the section 10 class 14 allowances are grouped into two parts. One is all about this block. Second block, second set of exemptions there, no. Those things are always taxable under optional tax regime. Okay. Under default tax regime, of course, optional tax regime is exempted. Default tax regime is taxable. Clear. These four will be a special thing. These four will be exemption available for these four allowances for both the category, whether you apt the default or non-default, optional. When it is all about transport allowance is totally different. Transport allowance is nothing but amount you spend for commuting, traveling from office to home and back. Okay, office to home and back, which is called transport allowance. Don't get confused with the traveling allowance. So for the traveling transfer, of course, you have to book the bus and train. Will it come under transport, sir? No, that will be considered as transfer or traveling allowances. When I say the term transport allowance, is totally different. Transport allowance is nothing but daily commutation between office to home and home to office back. For this, 3,200 per month is exempted, provided it is not available for all. It will be available only for blind, deaf and dumb or orthopedically handicapped. Only these three category means having the physical disability of these three category, then they can claim the deduction under section 10 class 14 under both the tax regime up to a flat rate of 3,200. First three will be exempted to the extent of actual spending for both the tax regimes. See, it's very simple. Traveling, daily, conveyances, all the three are for the official purpose. How can I say it's for my benefit? So naturally, it will be exempted for both the cases. And leaving that, all the special allowances named under section 10 class 14 will be taxable in the default tax regime, provided only one is escape from that, which is nothing but transport allowances, because it's a need, their disability, right? So for their disability, it should be honored and should be given. So if the assessee being the blind, deaf and dumb or orthopedically challenged person, then they will get the transport allowance. In that case, to the extent of 3,200 will be exempted under both the tax regime. Now, what about this one, sir? Rest of the other things, we'll discuss that in detail. Right. So, fully taxable under default tax regime. Section 10 class 14 fully taxable. Already explained. Section 10 class 14, you know, is all about special allowance. Special allowance grouped into two part. One is exempt under both the tax regime, default as well as optional tax regime. Another part will be under default tax regime, this will be considered as exempt. Okay. Default tax regime, it is considered as taxable. Under optional tax regime, it is considered as exempted. Clear? This exemption is also available only to the extent of number specified under rule number 2BB. This page and this page are same. Should not get confused. This page. In this page, I have given this way. Allowances which are exempt under both the tax regime. What are the allowances are exempted? If the question is asking about to list down the allowances exempted under both the regime, so you can straight away write. Any allowances given to citizen of India outside India is totally exempted under both the tax regime. Under special allowances, these are the four will be considered as exempted under both the tax regime. When you are asked allowances taxable only in the default tax regime, naturally 10 class 7 will not come here. 10 class 7 will not come here. 10 class 7 is this one. That will be exempted. Leaving the 10 class 7, 10 class 14, in that we have two blocks. Special allowance. First block is all about 4 items. So these are fully taxable under default tax regime, partly exempt under optional tax regime. Partly means to the extent of number specified under 2BB. But except what? These 4. Because these 4 already we studied, it's exempted under both the tax regime. This will be exempted under both the tax regime. So stating that whether it is taxable, so it is exempted under optional tax regime, but this will be exempted for both the tax regime. Here I listed down as exempted under both the tax regime. Here taxable under optional tax regime. So you have to understand the difference between these two. Is that clear? To give the summary here, you can understand this way. So we have exemption classifications, exemption spot. Right. So under default tax regime 115 BSC, under optional tax regime 115 BSC apt out. These are the two scenarios. This will be called default tax regime. This will be called as optional tax regime. Hope you will be now able to understand default tax regime and optional tax regime. Section 10 class 7. Okay, exempt here as well as exempt here. Section 10 class 14. 10 class 14. Okay. Under default tax regime, taxable, here exempt. Except 4 items. Except 4 items. 4 items. What are that 4 items are? Those 4 items will be exempt under both the tax regime. Now, what are the 4 items are there? One is traveling allowance or transfer allowance. Another one is daily allowance and conveyance allowance and transport allowance. Is that clear? Hope now you'll be able to understand this one. Apart from that, we have one more section called section 10 class 13A. HRA. Sir, if I get the employment in your company, this company is almost far away from my hometown. So to come and work in your company, I need to accommodate myself, so it costs me additionally. Employer say, no problem, you come, I will give some allowances to get a house property yourself rented. So he is pretty happy, he gets an allowances for the house rent property, house property purpose. If any allowances he receives for the rental purpose, no, that will be totally taxable under default tax regime. But in case of optional tax regime, of course, exempted. Though exemption means in these cases, Rule 2BB will be applicable. Rule 2BB applicable. Okay. In this case, allowances you receive minus actual spending will be subtracted, balance will be taxable. In the last case, exemption will be to certain limit. That limit will be studied in detail along with section 10 class 13. Hope now we'll be able to understand the grouping. So section 10 class A, totally exempted under both the tax regime. Section 10 class 13A, taxable under default and exempted under optional tax regime. That too, a specific number we'll study later on. Okay, most probably you may expect the illustration on HRA. Probably sometimes later that will also be scrapped, right? Section 10 class 14, we have a list. In that list, 4 items separated and balance will be grouped into different form. These 4 items will be totally exempted, not totally exempted, to the extent of actual spending is exempted under both the tax regime. Leaving the 4, whatever the rest of the things are, in those cases, it is taxable under default tax regime and exempted to the extent number specified under Rule 2BB for the optional tax regime. So, these 4 items you can understand easily. Now, my question is, what about this other items, sir? Other item, except for what are they? Let's see. Now, section 14 class 2. Section 14 class 2. Allowances exempt up to actual expenses. Allowances are amount specified in Rule 2BB. Allowances are Rule 2BB. Between these two, whichever is lower is exempted. Whichever is lower is exempted. We have been given almost 14 items here. If you go and refer your institute material, especially CA or CMA, this set of allowances itself runs through 2 or 3 pages also. Really not possible to keep all these things in your memory. If you want to go and refer section 10 class 14 class, subclass 2, the BAR Act still much bigger. Still much bigger. Anyhow, for the examination concern, you need to understand only 4. Master with only 4 items, thereafter you don't need to worry about that. Okay. So what are the 4 items you have to understand? Let's see. Now, children education allowance, hostel expenditure allowance. Simply you can keep the number in your mind. Children education allowance. If the employer offers for the education of the employee some allowances, okay. So I don't know how will you get education for 100 rupees per child per month. So in my days itself, it's a comedy. 100 rupees seems to be a comedy. Like when I studied in 1998 and 99. By the time my teacher told me 100 rupees, where is it possible to get education with 100 rupees? Still that 100 rupees remains unaffected after 25 years or 27 years. Anyhow, new income tax act will come, so all these things are going to be scrapped. So from this, it is very clear the life of this particular provision for 1 or 2 years. Additionally, usually these things are not most important for your examination. Anyhow, it's going to be scrapped. Understand the logic. In case of children education allowances, around 100 rupees per child per month will be exempted. That number is given in rule number 2BB. Okay. In case of hostel facilities provided, for that employer offers any allowances. Then the number is 300. That's all. Maximum 2 children can enjoy this benefit. Maximum 2 children can enjoy this benefit. Limited rupees 100 per child and maximum 2 children can enjoy. In case of hostel expenditure, 300 per child, maximum 2 children can enjoy. And for the point number 5 and 6, for the point number 5 and 6, child includes adopted child, stepchild, major son and daughter, but does not include illegitimate child and grandchild. Okay. So only adopted child will also fall under this, and stepchild will also fall. Major son and daughter will also fall. Right. And but does not include illegitimate child or grandchild. Those 2 children will not come under this category. And deduction is available in respect of actual expenses. Both the parents are eligible. So that's the additional point, right? So whether you spend it or not doesn't matter, but you can enjoy this 100 rupees benefit, right? Both the parents, okay, dad and mom. So parents Mr. A as well as Mrs. A. Okay, Mrs. A. So they have X and Y, daughter and son, right? Daughter and son, Mr. A also, and Mrs. A. For children education allowance, 100 rupees per child for 12 months can be enjoyable for two children. You can take 2,400 rupees benefit, right? It can be deductible. If you get the allowances being say 5,000 rupees, leaving 2,400, balance 2,600 is taxable. Is that clear? Now the question is, who is able to enjoy this benefit, sir? Mr. A can also claim, Mrs. A can also claim. Both can enjoy. So that's the additional point, right? So deduction is available irrespective of the actual expenditure. We never compare with the actual expenditure whether you spend it or not. Next one is both parents are eligible. Both parents. Mr. A can also claim. Mrs. A also can claim. So you don't say that Mr. A claims or Mrs. A cannot claim. That point will not be there. Only matter of 100 rupees who claims it or not doesn't matter. So it will not have any big impact in the taxation. And you will just understand this. Children education allowance as well as hostel expenditure allowances. Third one is all about transport allowance. Already I explained transport allowance, isn't it? Transport allowance is also exempted under both the tax regime. Granted to an employee to meet his expenditure for the purpose of commuting between the place of his residence and the duty, office and home. The exemption number is 3,200, but this will be available only for an assessee being the blind, deaf and dumb and handicapped employees. Is that clear? So the third item. So children education allowance, hostel expenditure allowance. Third one is transport allowances. Now last point that to be discussed here is all about transport employees allowance. Okay, employer and employee. Employer doing transport business, and the employee being the driver. Okay, okay. Employee being the driver. Is that clear? Employer and employee. So he may be truck driver or lorry driver. What happens in case of truck and lorry driving? So he starts and goes for a state to state. Usually he will not return to home immediately after the delivery. So in the case of auto, what happens? Auto pick up and drop. He picks up and drops you and gets back to his own auto stand. Because of Ola and Uber now today it's totally different. Okay, he keeps on traveling and gets the booking over the app, and by night he reaches the home. But in case of truck and lorry, I book my transfer my property, my home, shifting all my luggages supposed to be transported from one place to the other place. Probably I got shifted from Tamil Nadu to Delhi. I booked the lorry. Lorry transported the goods from Tamil Nadu to Delhi. After that, will he reach to Tamil Nadu back empty? Driving back to Tamil Nadu empty will be huge cost. For auto, doesn't matter. One-way trip, two-way trip. So you need to pay two-way trips, or only then I can go and come. It's not possible. That's why in transport industry, there may be lots of lorry booking services available. Small offices throughout India. Right. So you book a lorry for transporting your goods. Now transported from Trichy to Delhi. Before reaching Delhi, he informs the booking office there in Delhi and collects some other order to move from Delhi to some other places. That's how it's getting rotated all the places. Okay. Sometimes later from Delhi he can go again to Mumbai, and Mumbai to Calcutta. Surprisingly visits to Trichy or Tamil Nadu later. Okay. So when I joined a college in Namakkal, the vice principal had a chat with me, and I just had, by the time we were very young, just after completion of college, very curious to probe the world, and we loiter here and there. The vice principal told me, we too have the containers. So Namakkal, no, even a bit of rich people will have default a container. Like we have the car here, being the rich people, like their containers. I too have the container. The next day he called me to come for a small dinner and get together in his home. So we were the bachelors. So okay, anyhow we are getting the food, home food. So immediately went there, and I asked, where is the container? Container? I don't know, where is it? I surprised. You told me that you are the owner of container. Yes, the container left somewhere. Maybe it may be in Mumbai, or then it will go to Calcutta. 3 months once it will reach my place. Then what about your income? The lorry driver collects the fees for booking the luggages to be transported and deposits in the airport. That's all. And he takes money for his own spending. So very rarely I'll see my own truck. Oh my God! Only then a realist. So that's happening here also. So the lorry driver and the truck driver will travel a long distance, and during the travel, of course, lots of spending will be there. Most of the cases, it may be cash spending also, right? So there may be network problem and all. So he always demands the cash. So he will be given a benefit here, daily allowances, like whatever the allowances given to that employee by this employer is called transport employees allowance. Allowances for the transport employees, named usually daily allowances. As it travels from one place to the other place, we are not sure when he is going to get back. It takes long duration. It takes long duration. Daily allowances may be fixed. In that case, exemption portion, probably allowances received 1 lakh. Exemption portion being whichever is lower of A, 70% of such allowances, 70% of allowances, maybe 70,000. B, a limit given under rule number 2BB, which is 10,000 rupees per month. So this is all about for 12 months. 10,000 per month means 1 year, 1 lakh 20. Between these two, whichever is lower, 70 is deductible from 1 lakh. So 30,000 will be the taxable amount. 30,000 will be taxable allowances here. So allowances for transport employees granted to employee working in any transport system to meet his personal expenditure during his duty performed in the course of running of such a transport from one place to another place. One place to another place, provided that such employee is not receipt of daily allowances. He should not get any daily allowances. It is instead of daily allowances. Okay, this may be named as allowances to transport employees instead of daily allowances. So he is not drawing any daily allowances. He has to meet some expenses out of his own pocket. In that case, exemption will be whichever is lower of 70% of such allowances at 10,000. Is that clear? So fourth one. These are the 4 items you have to keep in your mind. What are they? Children education, hostel, transport, and transport implies allowances. Among the 4, only one will be exempted under both the tax regime, which is nothing but transport allowances for the blind, deaf and dumb, and physically challenged. Okay, orthopedically challenged. Right. Hope you'll be now able to understand. Right. Apart from that, all other allowances, related to the special requirement. Right. So if you are posted in Jammu and Kashmir, okay, what happens then? There will be always a threat. Okay, there will be always threat. At any time, the bomb may fall on you. Then there should be somebody in your family to take your allowances and all. So if you are appointed somewhere near the borders or high altitude, like Gargle glaciers and all, and island, mines, all these things are again tough terrain to live. Okay, for those tough terrain living will be again additional cost, and employees are not willing to go. So now employers are offering some extra allowances to motivate to go for these places. We'll have a list of numbers, of course, not required to memorize, just to understand the rules, that's more than enough. Very rare to get the numbers memorized here. What are they? Special compensatory allowances is all about hill area. If you are posted in a hill area, naturally, apart from the regular salary, you will be getting an allowances in the range between 300 to 800. 300 to 800. Sometimes it may be 7,000 also in case of Siachen in Jammu and Kashmir. So, hill area allowances. And border area. You may be appointed some border area. Based on the riskiness and other factors, the border area allowance also be anywhere between 200 to 3,300. Of course, you cannot memorize. Okay, is it 200 or 1,300? There's a list of borders stated along with the numbers in Rule 2BB, which is not possible to memorize. It's a dictionary like. So if you want to refer something, you can go and see the encyclopedia or dictionary. Similarly, if you want to know what area, what allowances may be exempted, so you can go and refer in practical life. In your examination purpose, of course, it's not possible to memorize all these things. So you no need to worry about that. So just have the idea at least. In case of hill area, border area, and tribal and scheduled area allowances. Tribal and scheduled area allowances, right? So in case of tribal and scheduled area allowances, people living in tribal areas, hills, right? Hill people. So I just got surprised. The tribal people living in Kodaikanal, had a chat with them. They live here or there, wherever they want to live. That's all. Okay, I surprised. Huh? Do you have any house? Then they're just showing a tent and it's my house, I'll stay. Okay, what happens if a huge rain comes? Then he says a storm and other things. We'll shift that tent, that's all. Okay, so the hill station, hilly, rock and forest like. So when I had a chat with the tribal, no worries, sir. I'll take inside the deep forest also come with me. So I was just surprised. Oh my God. And I just walked with him. Suddenly in a place, no, I just saw it's directly 30 feet down. So no problem, sir. You keep leg here. Oh my, I can if I miss, no problem, sir. We'll hand over your body. Okay. Okay. So such a case happens there. How do you live this? How do you manage living this, sir? We usually fight with the man also. That deer, no? He runs so fast along with the deer in that hill stations. Tribals. Huh? Their life seems to be very tough. Okay. I just asked him, don't you study at least 7th or 8th standard? Sir, that's very tougher, sir. Running in the mountain seems to be very easy for him, right? So, tribal area. If you are posted in the tribal area, of course, the life will be pretty tough. Once or twice, okay. For a vacation, you can go. But living there will be tough, right? Okay, so when I had chat with one of the train passengers, when I traveled down from Chennai to Trichy, a young chap sat just near to me, and I had chat with him and got the information that he was the auditor, CAG auditor. Surprised, how at your age? I thought I need to qualify myself CA and CMA to qualify as a auditor, but how, sir? In UPSC, no. We can qualify ourselves audited, sir. Only UG is enough. Oh my God. You didn't tell me that route earlier. Very simple. He was around 26 or 27 age. He came to Trichy to audit Tamil Nadu Electricity Board. So I had a chat and I told him I was a faculty for handling the classes for CA. He got so curious, sir. I've seen so many accounts, sir. Especially in this electricity board, no, their accounts very confusing, sir. As he now thought me being the teacher, he started asking. Okay, then I told him, we had a double account system. Okay, you might have studied the double entry system, right? Every debit will have equivalent credit. But in the electricity company, they had a different system called double account system. Okay, balance sheet is going to be shown into two parts. One is all about the permanent investment, another is all about regular working capital like. That's called double account system. I just explained, said, oh, is it so? Do you have any notes on regarding this? So, by the time it was one of the topics in CMA material, I showed him. Thereafter, it was scrapped. Now they also follow the regular final accounts only. Final accounts only. It was an earlier period. He just told me, sir, when I go and inquire about the accounts and all in Tamil Nadu Electricity Board, no, all the senior people, 50, 55 plus, and maybe CA, got shocked and very respectful. I feel myself embarrassing very first time when I go for auditing because at the age of 27 or 28, okay, even CA needs to answer him. Right, being the employee of Tamil Nadu Electricity Board after the CA, you cannot sign. You lose the signing power. Who comes for the auditing of government companies? especially government, automatically CAG will come. So he was the qualified CAG, comes for the audit. I just had a nice chat. Sir, my first appointment is in Andaman Nicobar Island. Oh, it's very nice. No, we thought to have a family trip for Andaman Nicobar. We planned for since last 4 or 5 years, but we could not go because of the busy schedule. Yes, sir, it's very nice. Then I heard about the waves are changing its color, and the sand will also be totally different. Yes, sir. My office, no. From there, if I open the window, I can see the waves. The morning it will be reddish, then it will be blue, like 4 or 5 colors is changing. The morning at 9 o'clock, I just stared that and started enjoying. Second day, I sat there and started seeing the same. Last day, I started and getting frustrated seeing that. The same Andaman Nicobar, right? So fantastic one to visit once or twice, okay, but staying there for a long time, it's not really good. So then I made a decision to go for higher exams, and I wrote the exam and cleared and got settled in Chennai. Want to run out of Andaman Nicobar because the ship for groceries and all comes to Andaman Nicobar once a month. Tomato reaches Andaman Nicobar. The day the ship reaches, the tomato price may be 100 rupees. Matter of 15 days later, because they have to wait for the next ship. By the time 1 kg per tomato becomes 200 or 300 rupees, but the stale. The same tomato will be there, but it seems to be stale. Right. Living in island, tribal area also be trouble. So living in island also be again problem, island allowance. So one is all about hill station. Depending upon the altitude, the rate may be different. Siachen in Jammu and Kashmir, very toughest place, so 7,000. Border area anywhere between 200 to 1,300. Tribal and scheduled area allowances, it's anywhere, it may be 200 per month. And island 3,250. Compensatory field allowances, compensatory modified area allowances, counter insurgency allowances. So compensatory field, the field may be really tough to live. To compensate, allowances is given, which is limited to 2,600 per month. Compensatory modified area allowances limited to 1,000 per month in some cases. In some cases, and what are the cases are, as I already told you, no need to worry mugging up this thing, not required for your examination. But at least have an idea about these allowances also possible. Anyhow, once the direct tax code, new act comes, no, not the next year, thereafter it will be implemented. By the time all these things will be scrapped. Okay. So you study, write the exam. Once you confirm pass, forget about this. Once you confirm, underline, okay. Otherwise, you still have one more year to study. This one. Thereafter, whether you pass or not, you can forget. Right. Understand. Underground mining area, like underground allowances limited to 800. High altitude. Altitude is all about the height. High altitude. The allowances may be 1,060, where the altitude is anywhere between 9,000 to 15,000 feet. If the altitude is more than 15,000 feet and 1,600 for that area, is that clear? High active field area allowances also 4,200. Among all these ideas, all these allowances, education, hostel, transport employees, transport allowance and transport employees allowance. Transport employees allowances. This will be 100 per month per child, maximum 2 child. Here 300, transport 3,200, but blind, deaf and dumb and physically, orthopedically challenged, right? And this will be available for default tax regime as well as optional tax regime. These two they can enjoy. Transport employees, whichever is lower of 70% of such allowance, and second being 10,000 per month is deductible. Is that clear? Hope now you'll be able to understand all the list. Clear? Now, this is all about section 10 class 14 subclass 2 if you want to specific. Apart from that, section 10 class 14 subclass 1 also we have. Section 10 class 14 subclass 1 will be exempted under both the tax regime. This is also exempted under both the tax regime. Clear? Now, what are they? Special allowances exempted up to actual expenditure. We have already studied traveling expenses, transfer allowances, transfer, and conveyances, daily allowances. We have studied these three. Apart from these three, another three will be added: helper, research, and uniform. Uniform. Apart from that, transport allowance. Already we covered these four items. These four items. Default tax regime, optional tax regime. In both the cases, exempted. Okay. In case of transport, the number specified under rule number 2BB will be taken. And this was also studied. Allowances you received minus spending will be taxable amount, provided if it is being the positive number. Negative, you just omit it. The same logic will be applicable for these three allowances also: helper, research, uniform allowances. For performing any official work, you yourself cannot do it. Then you demand some additional helpers for doing that. So, for example, the employer asked you to parcel the bike to one place to another place and book and send that in train. So, how can I pick and parcel, sir? You get the helper there. So, for the helper, if you are paying any amount, say 200 rupees or 300 rupees, you can get the same 200 or 300 rupees from the employer. If you get 300 rupees and you offer the 300 rupees to your helper, nothing will be taxable. If you get 300 rupees but you pay only 250, 50 rupees is retained by you, then it is taxable. Then it is taxable. Then in case 300 rupees but you pay 350 seems to be negative, then it is not considered for the taxation purpose. Is that clear? So, traveling, transfer, conveyances and daily. Apart from that, helper, research and uniform. Helper already you know. Uniform allowance. So, in some companies, the uniform is mandatory. Uniform is mandatory. Okay, for that any allowance is given. It's not only for purchasing the uniform. In order to maintain that also, you can get any allowances also be considered as exemption. Maintenance means washing and pressing and all these things also be considered as maintenance one. For that also you can get the allowances. You can claim the deductions. Uniform and helper. Research allowances. Most probably in college, the professors and the lecturers may get some subsidy from government grants commission, UGC, University Grants Commission, or their principal or management to do some research contributing for the nation's growth. Okay, I want to know how about the general public's opinion about new bill passed. So that I collect and present this as a guidance to the government, or I can do some research and development whether this medicine is suitable for this disease or not by biotech department. For all this research, they need fund. There are lots of bodies are there to fund, like UGC, okay, University Grants Commission. Not only that, sometimes principal, the management themselves also sponsor. If being the lecturer or professors or research scholars getting any subsidy or any contributions in this regard from government or management, will be totally exempted to the extent of actual spending. You got 1 lakh rupees and you spend around 1 lakh rupees, nothing is taxable. That is called research allowances. This may be named as research allowances or academic or professional development allowances. May be used for academic or professional research. So, helper, research and uniform. Don't say it is dress allowances. It should be uniform allowances. Dress allowances not allowed. Okay. Uniform allowances only allowed. Right. Clear? There should be uniform for the organizations. You have to wear that one only. That is a specific design. Okay, sir, I am coming with my own attire, sir. Okay, kindly give me some allowances for washing and pressing, sir. Can I get? Yeah, of course you can get, but that will be considered as your salary and taxable. Clear? So, purchase and maintenance, all the things will fall under this. Clear? Yeah. So, we have completed all this aspect. Let me go for a summary here. What are the allowances we have discussed up to now? Section 10, Class 7. This is all about Government of India offering the allowances for citizen of India outside India under default tax regime 115 BAC as per this section, under optional tax regime 115 BAC apt out, under 115 BAC or apt out, whatever it may be, in both the cases exempted. Then we'll go for around 6 allowances. What are they? Section 10 class 14. Okay, daily allowance, conveyance allowance, transfer allowance, and transfer or traveling allowance, helper allowance, uniform allowance, research allowance. Research allowances. Is that okay? These are again exempted only under both the tax regime. Exempt. In these cases, allowances you receive minus actual spending. If it is positive, then it is taxable. Exempted to the extent of actual spending. Transport allowance, exempt up to 3,200. 3,200 per month, and blind, deaf and dumb, and orthopedically challenged. The assessee being blind or deaf and dumb or orthopedically challenged, then they can claim the deductions exemption of rupees 3,200. Clear? Others, always taxable, exempted under number specified under rule number 2BB. In this case, I request you to memorize only 4 items. That's more than enough. Children education, hostel, 3 items. Another one is all about transport employees. Because already transport allowance is included here. 4 allowances. Education allowances rupees 100 per child per month maximum. 2 children can enjoy this benefit. Hostel being 300 per child per month. Transport allowance, whichever is lower of 70% of such allowances, are 10,000, a flat rate, 10,000 per month. Okay. So all the things what we have discussed is given as a summary here. If it is clear, text me. So we'll go for solving some illustration. One more item is there. Section 10 class 13A, HRA. Here taxable, here exempted, but you have to study in detail. Okay. Now let's try to solve this illustration. Preet is employed as a driver in a transport company. During the previous year 24-25, he has been paid 24,000 per month, being allowance to meet his personal expenses in the course of running trucks from one place to another. He is not receipt of daily allowances. Of course, he is not receiving any daily allowances. Is that clear? So he should not get any daily allowances. Instead of that only, he is getting this 24,000 rupees per month. The actual expenditure incurred, however, is 30,000 rupees. He gets only 24, but he spends 30,000 rupees. But under Rule 2BB, no, the actual expenditure is not a matter for me. What about the allowances the employee receives? 24,000 into 12 months. Come on, tell me, how much is that? 2,88,000 minus whichever is the least is exempted, A being 70% of such allowances, 2 lakhs 1,600, B being 10,000 per month. So for the year it is 1,20,000. Between these two, whichever is lower will be taken. So 1,20,000 is exempted. 1,68,000 is taxable. Taxable. Sir, he spends 30,000, sir. That doesn't matter here. Okay. Shall I move on to the next one? Now, we'll deal with section 10 clause 13A HRA. In case of HRA, house rent allowance, under 115 BAC, fully taxable. If you are shifting out of 115 BAC, exemption being whichever is the least. 115 BAC is named as default tax regime. This will be named as optional tax regime or shifting out of the optional means default tax regime. Here, whichever is the least, number 1, 50% or 40% of salary. 2, actual HRA received. 3, rent paid minus 10% of salary. Salary means rent paid in excess of 10% of salary. Salary for this purpose being 3. Among the 3, the least will be exempted. That's all. What about that 50%, sir? This 50% is applicable for the metro. Okay. Chennai, Mumbai, Delhi and Kolkata. These are the metro. Today, Bangalore has more cost of living index. Rent is also exorbitantly high in Bangalore. But still it is not coming under metro. Okay. Anyhow, it's the old one. Still we continue. First part. So HRA will be exempted only in the case of optional tax regime. That too, one of the least of the 3 will be exempted. 50% or 40%. If the place of house property he occupies being in metro, then 50% of salary will be taken, else 40%. Where he occupies is the matter. Where he employs is not a matter. Okay. If he gets the house property rented in Chennai, then 50%. But if he stays in Kanjipuram, okay, employed in Chennai, stays in Kanjipuram, then only 40% will be taken. But anyhow, today the Kanjipuram itself Chennai. Wait, we will also become Chennai people. Sometimes later, right? So the Chennai bus stand, central bus stand, right? Like now is in Kanjipuram. Okay, right. So the premises will be the matter to decide whether it's a metro or non-metro, not the employment. Clear? And one more point to be noted here is one more point. If there is any change in any of these aspects, what are the things are there? What are the things? Payment of rent. If there is any change in any of the year, any of the month, you have to calculate separately before the change and after the change. The rent payment may be 10,000 for 7 months. Another remaining 5 months, no, the rent increased from 10,000 to 12,000 rupees. For the 7 months, you have to calculate separately. For the 5 months, you have to calculate separately. Before the change and after the change. Before the change and after the change. And salary. What happens if the salary changes? If there is an increment. So, before the increment, you have to separately calculate. After the increment, you have to separately calculate. What happens the stay? Either it may be metro or non-metro. 3 or 4 months is stayed in metro. The remaining months is stayed in non-metro. Then to the extent or period he stayed in metro, we have to calculate based on 50%. To the extent he stays in non-metro, so we have to calculate based on 40%. Third one. Okay. And the HRA, what you receive? If the HRA is changing, you have to calculate separately. So, for all these 4 changes, you have to put the importance. If all the 4 are same, then you can calculate. All the 4 are same for 3 months. 3 are same for 2 months. Then you have to recalculate for the remaining month. So, to make you understand this concept, I have incorporated an illustration for your better understanding. Okay. Let's now start working some illustration here. HRA under section 10 clause 13A under default tax regime fully taxable. Under optional tax regime, exemption will be whichever is the least. Number 1, 50% situated in metro in case or 40% of salary in other cases. Okay. Actual HRA is the second one. Third one being the rent you actually paid in excess of 10% of salary will be considered. Note, salary for this purpose being 3. What are they? Basic, DA forming part of salary and fixed percentage of commission, number 1. Number 2, calculate separately any change happens here, such as either it may be rent or any change in the salary or any change in the location. Location from metro to non-metro will have the impact. If he stays in metro, again shifted to the new metro, will have no impact, right? Fourth one being if there is any change in receipt of the HRA. Now, all these changes you have to incorporate carefully, right? And you need to understand what are the cities will be considered as metro. Chennai, Mumbai, Delhi and Kolkata. That's all. Clear? Let's now try to solve the illustration. Come on. B is employed at Mumbai as a manager of Odd Limited. The particulars of his salary for the previous year 24-25. So 1/4/2024 ends on 31st March 25. During this period, his basic salary being 26,000, dearness allowance being 15,000, conveyance allowances for personal expenses 6,000 per month, right? And commission 0.5%. Okay, of the turnover achieved, which was 90 lakhs. So for the 90 lakhs, 0.5%, how much? 45,000? 45,000 per annum. Previous year, and the same was evenly spread. All the month he gets the same. HRA being 10,000 per month, the actual rent paid by him is 15,000. So HRA being 10,000 per month. But the actual rent paid being 15,000 per month for the accommodation till 31st December 24. Rent paid, how much? 15,000. From 1125, the rent was increased to 17,000 rupees. From here, rent paid being 17,000 rupees. Compute taxable HRA. So, four aspects. Rent stays in Mumbai Metro. Okay. Listen. Rent paid, HRA received, and location, salary. Is there any change? No, no, no. There is a change in rent paid. If there is change in any one, so you have to calculate separately up to this change, thereafter separately. So from this it is very clear. This is for 9 months, am I right? Calculate 9 months separately, 3 months separately, 3 months separately. Let's calculate here. HRA received for the first 9 months, next 3 months. Here the HRA being 10,000. Here also HRA being 10,000. Minus whichever is the least is exempted. Per month basis. I am going to calculate per month basis and then I multiply with number of months later on. Okay. Number 1 being 50% of salary because metro. What is the salary here? Basic 26,000 into 12 months. Come on. Per month, no, 26,000. DA, nothing stated, then you can assume this DA may be part of forming part of salary or non-forming. So I may assume this is being the forming part of salary. 15,000. And fixed percentage commission. 45,000 per annum, but I consider calculating per month basis, right? So what is the per month commission here? Huh? 750. 3,750. What is the total salary here now? 44,750 is the salary. Okay. Now, come on. 50% of this. 22,375. 22,375. Second, actual HRA. How much is that? 10,000. 10,000. Third, rent paid minus 10% of salary. So here 10% of salary being 4,475. 10,525. 12,525. Am I right? Okay. So 10,525. 12,525. Among the three, the least being 10,000. Here also 10,000. Nothing is taxable. Nothing is taxable. Okay. Automatically, nothing is taxable for the whole year. Okay. For the 0, do I want to calculate so much, sir? Yeah. You will get no 0 mark. Okay. So, you put that 0 after this calculation, you will get some mark. Else, you will get 0 mark. Right. Clear? Come on, text me the next one. Now we'll move on to the next one then. Mr. Mohit is employed with XY Limited on a basic salary of rupees 10,000 per month. He is also entitled to DNS allowance at the rate of 100% of basic salary, 50% of which is included in salary. as per terms of employment. So basic salary 10,000 per month, so 1,20,000. DNS allowance also 1,20,000 rupees. But in that 50% being forming part of salary. The company gives him house rent allowance 6,000 per month, which was increased to 7,000 per month with effect from 1/1/25. So HRA 6,000, 7,000 from 1/1/25. So you have to calculate HRA for up to 1/1/25 separately, thereafter separately. He also got an increase of 1,000 per month in basic salary with effect from 1/2/25. Then what happens here? There's a change in the salary. Salary being 10,000, then increased to 11,000 rupees, from which date? 1/2/25. Then automatically it will be different, right? We'll calculate that later on. I will finish up that later on. Rent paid by him during the previous year 24/25. Rent. April, May nil. Up to 31st May nil. June to October 6,000 per month for an accommodation Ghaziabad. This will be from 1st June 25 onwards, 24 onwards. Okay. And 24/25 November onwards 8,000 rupees in Delhi. This is from 1st November 24. This will be in Ghaziabad. This is in Delhi metro. Delhi or metro. Whatever the change may be, you have to incorporate the HRA calculation separately for every change. So what are the changes are there? As per the sequence, the earliest change being this one. Up to this period, he stays where? With his parents, he has not paid any rent. Rent paid being 0. So 1/4/24 up to this date. 1/6/24. During this period, rent paid being 0. After this, again 1/11/24. From that date onwards, he is in Ghaziabad. From this date after, he resides in Delhi. Okay. Rent paid being 0. Rent paid being 6,000. Thereafter, what happens? 1/1/25. 1/1/25. Up to this period, the salary being how much? 6,000. Sorry. Oh, this is HRA. HRA being 6,000. Thereafter, it becomes 7,000. 1/2/25. There's a change in salary. There's a change in salary. Up to this date, the salary being 10,000. Thereafter, for the year end, up to 31st March 25, the salary being 11,000 rupees. DA 100 percentage, but 50 percentage being forming part of salary. Clear? Rent paid 6,000 here. Up to how long? 1/6/24 to 1/11. 6,000, that too in Ghaziabad. From 1/11 onwards, the rent payment being 8,000 in Delhi. I just marked down all these changes. HRA from 1st April to 1st January, the HRA being 6,000, thereafter the HRA being 7,000 rupees. Salary 1 to 25 up to this date 10,000, thereafter 11,000. So I have taken all these things. This information is okay for calculating the HRA, taxable HRA here. Let's see. I'll calculate one after one here. 1/4/24 to 1/4/24 to 1/6/24. Otherwise 31st May 24. 2 months. Thereafter from 1/6/24 to 31st October 24. How many months? 6, 7, 8, 9, 10. 5 months. 5 months remains same. Then 1/1/25. From 1/11/25/24 onwards, 31st December 24. 2 months. Thereafter, the change happens on 1st February. So 1st January 25 onwards to 31st January 25. 1 month. 1st February onwards, there is one more change. 1st February 25, 31st March 25. How many months? 2 months. Cross verify whether the summation is equal to 12 months or not. 12 months. Then okay. What are the things are in need for us? I'll start with basic pay. Basic salary. 10,000 up to how many days? 1st February. So 10,000 per month basis, 10,000. And 1st February onwards, the salary becomes 11,000. 1st February onwards. For the first 4 options, it is only 10. Thereafter, it is 11,000. Now, salary. Then next one is DA. DA forming part of salary will be taken because I'm going to calculate the salary for the purpose of HRA. Salary for the purpose of HRA being the basic plus DA forming part of salary, fixed percentage of commission. Here, fixed percentage of commission is not given, so only DA forming part of salary will be taken. DA being 100% of the basic, in that only 50% being the forming part of salary. So directly multiply these two, 50% of the salary will be the forming part of salary. So here 5,000, 5,000, 5,000, 5,000, 5,500. Salary for the taxation purpose, especially HRA purpose. Salary for HRA being 15,000 for the first 4 options. Is that okay? The last 2 months, the salary being 16,500. 16,500. Is that clear? Salary. Now, I am going to calculate the tax of HRA. First, calculate the HRA received. HRA received. How much HRA is received? 6,000. Up to how long? 1/1/25. 31st December, until that period, he received 6,000 rupees. So 6,000, 6,000, and 6,000. After 31st December, the HRA increases to 7,000. For the last two block, his HRA receipt being 7,000. 7,000 minus whichever is the least is exempt. Whichever is the least is exempt. Number one being 50% or 40% of salary. 50% or 40% of salary for this purpose. Okay, this one, salary for this purpose. 50% of salary or 40% of salary. Until he stays in Ghaziabad, 50% of salary will be, 40% will be there taken. Thereafter, if he stays in Delhi, 50% will be taken. Right. 11124 he is in Ghaziabad. 111 means first two blocks. He stays in Ghaziabad. The last three blocks he stays in Delhi. So here 40% of salary. 40% of salary being 6,000. 6,000. And from 1st November onwards, 50% will be taken. So 7,500. 7,500. 8,250. 8,250. 50% of 40% of salary. Second being actual HRA. Actual HRA. You can recopy this here. 6,000. 6,000. 6,000. 7,000. 7,000. Third being rent paid minus 10% of salary. Salary for this purpose is already calculated. You can take this one. Rent paid being 0 for 2 months. This up to this period. First block, rent paid being 0. 0 minus 10% of salary should not be negative, so make it 0. From 1/6/24 to 1/11/24, the rent paid being 6,000. 6,000 minus 10% of salary. Which period? This period. Okay. 1/6 to 1/11. 1/6 to 1/11. Right. Rent paid being 6,000 minus 10% of salary. Salary for this purpose being 15,000. Okay. For the period 1st June to 31st October, salary payment being 15,000 per month and rent payment being 6,000. So 6,000 minus 10% of this, 4,500 will be the value here. Thereafter, he pays 8,000 rupees in Delhi. 8,000 rupees in Delhi. Right. Clear? And what about here, second case? Rent being 8,000 rupees minus 10% of salary. Salary for this purpose being 15,000. So here 6,500. And here again salary being 15,000. So you will get the same 6,500. The last case, the salary is increased to 16,500. So 8,000 minus 10% of salary for the last block. Okay. A, then B, the last one being 16,500. 1,650 is subtracted, so 6,350. So C. I have given the calculation separately. Now choose the least of the three. First option only 0. Second option 4,500. Third option 6,000, 6,500, 6,350. Now find out the taxable value. Taxable HRA. You have to subtract the HRA received. This list of the three will be subtracted from the HRA received. So 6,000 minus 0. Entire 6,000 is taxable. 6,000 minus 4,500. 1,500 is taxable. 6,000 minus 6,000 0. 7,000 minus 6,500 500 taxable. 7,000 minus 6,350 650 is taxable. Clear? Now total taxable value. Total. 6,000 for 1 month, for 2 months it should be 12,000. Am I right? 1,500 per month for how many months? 5 months, 7,500. 0, 500 into 1 month, 500. 650 for 2 months, 1,300. Now the total of all these things will be the taxable value. 21,300. Now what about the taxable salary, sir? Basic. If you want to calculate complete taxable income, okay. So for 2 months the salary is higher. For 10 months, 10 into 10,000. For 2 months, the salary is 11,000. Then overall value being 1,22,000. DA being 1,22,000, 100%. Apart from that, no other allowances, right? DRS allowance, that's all. Apart from that, taxable HRA in this case being, refer the calculations, 21,300. Gross salary for the taxable purpose being 2,65,300. In case default tax regime, in case of default tax regime, this exemption will not be given. Whatever the HRA receipt will be completely taxable. In that case, basic 1,22,000, DA 1,22,000, HRA receipt being 6,000 for how many months? Up to 9 months, 54. 7,000 receipt for 3 months, 21,000. Then overall HRA being 75,000. Entire 75,000 will be taxable here under default tax regime. This is default tax regime. This is optional tax regime. What about the total of this? 3,19,000 will be the gross salary. Clear? Hope now you will be able to understand these two cases here. So we have completed various forms of salary, exemptions as well as allowances. Leaving the perquisites to be covered, 17 class 2. So we have completed all the aspects except 17 class 2, all about perquisites. Is that clear? This illustration comprises all the content what we have covered up to now. Okay, let's see. Mr. M is an area manager of Messrs. N Steels Company Limited during the financial year 24-25. He gets the following emoluments from his employer. Right. Compute the taxable salary of Mr. M for the assessment year 25-26 under shift out of the default tax regime and the default tax regime both. Okay. So if he apps out 115 BAC or apps 115 BAC, two scenario. Start with basic salary. For up to 31st August, the salary being 20,000 rupees. How many months are there up to August? 5 months, right? 5 months. From 1st September onwards, 7 months. Here 1 lakh. Here 1,75,000. The overall value being 1,75,000 taxable under both the tax regime. 2,75,000. 2,75,000. Is that okay? Okay. Transport allowance. Transport allowance. Always taxable. This will be exempted only in case of blind, deaf and dumb and orthopedically challenged. Yes, completely taxable 24,000 in both the tax regime. Contribution to recognized provident fund. 15% of basic and DA. Okay. Do we have the DA here? DA information is missing. Okay, 15% of salary. RPF. In case of RPF, only 12% is exempted. Beyond that is taxable. It's not allowances. Okay. So 3% is taxable. 15% up to 12% is exempted. Beyond that is taxable on salary. So, 3% on 2,75,000. 8,250 will be taxable under both the tax regime. Children education allowance. Children education allowance. 500 per month for 2 children. But how much is exempted? 100 per child is exempted. So 500 for 2 children. Okay, minus 100 per child for 2 children, it is 200 rupees. 500 minus 200, 300 will be the taxable value per month. For 12 months, 3,600. This will be only if you are shifting out of the default tax regime. Under default tax regime, nothing is deductible. The entire 500 rupees per month will be taxable. 6,000 is taxable. City compensatory allowances, fully taxable allowance. CCA is fully taxable allowance. CCA. City compensatory allowance. 3,100 per month, 3,900 per annum, it is taxable. Fully taxable allowance under both the tax regime. Clear? So I just started with that one in the very first class. City compensatory allowance. So if you ask me, do I want to remember all these things? Then no. Only selected things. What are they? Children education allowance and hostel, transport allowance and that 6 set of allowances. Transport employees allowance. Remember these 10 allowances, that's more than enough. And section 10 class 7 for any allowances payable outside India for Indian citizen. Also completely exempt. Leaving that any allowances comes along with the judges allowances. Always taxable. No need to worry about that. Sir, what about that high altitude? Those things are very rare in your questions, right? You no need to worry about that. Yeah. 3,600. Okay. Then we'll move on to the next one. Hostel expenses allowances. Hostel expense allowances. 380 per month for 2 children. How much is exempted? 300 per child for 2 child. 600 exempted. So the value is negative, so nothing is taxable. Under shifting out of the default tax regime. Under default tax regime, completely taxable. 380 into 12 will be taxable. Come on, how much is that? 4,560. Tiffin allowance. Whatever the allowances may be, fully taxable. Okay. Tiffin, snacks, whatever it may be, fully taxable. 5,000 per month in both the tax regime. We have not studied this allowance anywhere. Outside that 10 allowances set. 10 allowances set. Okay. Tax paid on employment. Tax paid on employment is nothing but professional tax. Okay. Okay. If the amount is paid by the employer, first included as income, then it should be deductible under section 16 class 3. That too in shifting of the out of the default tax regime. So professional tax PT in short will be first included in the income. That's all. Come on, find out the gross salary. Gross salary in this case being 3,21,950 and here 3,28,910 minus deductions. Under section 16 class 1A, standard deduction. Under default tax regime, you will be eligible for higher number. Opt-out scheme, you will be enjoying only 50,000 rupees. 16 class 2, entertainment allowance is available only for the government employees. Of course, no need to worry about that here. Directly go for the third one, professional tax paid. If the professional tax paid by employee out of his money can be deductible only. If it is received and paid, received from the employer and paid later. On receipt, it is income. On payment, it can be deductible under section 16 class 3. So here this value being 2,500. This will not be applicable in case of default tax regime. The direct deduction under section 16 class 1A is itself higher number. So you will be enjoying more benefit. Usually, employees are shifting out of the choosing the default tax regimes only. Currently, it's an option. You can either go for this one or that one. Sir, can I calculate the tax under both the tax regime and finding which is the cheaper one and can I add that one? Of course, you can do so. If you find that default tax regime is cheaper, you go for that. Or if you find optional tax regime cheaper and lower tax, then you can go for that one also. Optional, year on year, you can do it. But next year will be the last, I think. So thereafter, it will not be applicable, right? Come on. Tell me the taxable net salary. 2,69,450. And here 2,53,910. Right. Now let's start with perquisites, section 17 class 2. In 17 class 2, we have been given almost 8 items, one additional item in 7A. So 9 items like in fringe benefit also we will study around 7 or 8 items. So many points we have here. Perquisites is nothing but non-cash benefit. Non-cash benefits are otherwise named as benefits in kind. So if you tell to the or if you demand to the employer, as the place of work is almost exterior place, not in the city, I have to come from outskirts. Where do I want to stay, sir? It's really expensive for me. Give me some cash so that I'll get some house property in rental and stay. If you demand the cash, then it is called house rent allowances. The employer says, no need to worry about that. So we have the quarters, go and stay there. Rather than cash, the facility itself given, then it is called perquisites. Right. To and fro between residence and office to residence. Give me some cash so that I'll catch up my own vehicles to come and go. The employer says, no need to worry about that, so I'll give the free car, you can come. Free bus I'll give. Company bus is there, you just come in the company bus. Medical allowances, some emergencies there, so monthly some amount you just give me for my medical treatment. No need to worry about it, so we have the hospital, go and get treated. So all the facilities not in the form of cash, but maybe in the form of real benefit or in kind. That is called in kind. For my children, give me some education allowances. No need to worry about it. So we run our own schools. Allow your kid to stay there and study without fee. So for the BHL here in Trichy, they have their own schools, and Dalmiapuram, they have their own schools where the employees of the Dalmia Cements will study there at free of cost, or a small nominal amount may be payable. So you don't get the cash, but you get the facilities directly. That is called perquisites. Rather than getting the allowances for rental purpose, the quarters is given or free accommodation is given by the employer, or accommodation is provided and nominal value is charged. These two studied under these two cases. 17 class 2, subclass 1 and 2. Rent-free accommodation provided, and accommodation provided not free but a small amount is recovered, concessional rate. And 3 and 4 is all about some benefits and amenities or employees' obligations, some benefits and amenities. The benefits and amenities is nothing but watchman, gardener, okay, some servant may be provided at free of cost. Free of cost means the salary is payable by the employer. Amenities means maybe free water, free electricity, free gas may be supplied by the employer. You don't need to pay any money. Those things are called as amenities. Or sometimes free transport facilities, schools, car, all these things are falling under the third and fourth block. Okay, benefit or amenity granted, or any obligations of the employee paid by the employer. See here, these are the list of benefits and amenities maybe we study in the coming chapters. Motor car, sweeper, gardener, watchman or any attendant, gas, electricity, water, educational facilities are employer's own institutions where the employee can accommodate his own child, free or concessional tickets for travel, transport purpose, medical facilities, leave travel concessions. So LTC section 10 class 5 falls under perquisites, not in allowances. Is that clear? These are the 7 cases you have to understand. Okay. So 3 and 4 will have 7 items. We will study all those things in subsequent lectures. Life assurance or annuity plan, for that any benefit or any payment made by the employer, the contribution. For the LIC, the premium is payable. Annuity, for that also any consideration is payable, will also be considered as exempted. Will also be considered as exempted. Some extent, and some extent will be taxable. Sweat equity shares. Company may issue the shares to the employees at much discounted values on satisfaction of some other conditions. Their loyalty. The employees are loyally working for the company for more than 10 or 15 years. The management is happy. And in honor of their own loyalty, the company may offer some discounted shares at discounted price. Market price of the share may be 100, but it is offered to the employees at 60 or 70. The difference between these two is the free benefit, like that will be considered as your taxable benefit, sweat equity share. In case of PF, Provident Fund, already we learned that up to 12% is exempted, beyond 12% is taxable, right? Even though it is less than 12%, but the gross value in a year is more than 7.5 lakhs. Then the amount in excess of 7.5 lakhs will be considered as taxable. Taxable perquisites in case of PF or any other superannuation fund. Retirement benefits. All the retirement benefits, especially PF put together, in a year's contribution by the employer is in excess of 7 lakhs, 7.5 lakhs. 12% is already we learned. That 12% itself, so for example, the salary being 10 lakhs. Basic salary per month 10 lakhs. For that 12% being 1,20,000 rupees. Per year, how much? 144 or 14.4 lakhs. So as per the earlier study, up to 12% is exempted. But the total value is 14.4 lakhs, no, which is more than 7.5 lakhs, then that amount is taxable. Okay. This is exempted. Beyond that, how much is that? 6.9 lakhs. This is taxable. Not only this is taxable, This amount is accumulated in the PF account, right? So for that they are eligible for interest from the PF fund. Interest on this amount is also taxable. Okay, this is exempted. Interest on this is also exempted, but this one will be taxable. Not only that, interest on that will also be taxable. Interest and dividend on the above fund also be taxable. Clear? Those things are studied under 7 and 7A. 8th is all about fringe benefit. Any other small benefit. Tea times are provide us tea at free of cost with vada, high tea. Can I get it? So yeah, of course you can get it. What about the lunches, sir? Can you provide the lunch? Yeah, of course you can get that lunch at free of cost. No issues. You can get it free of cost. No issues. Can I get some membership in health club, sir? I will go and maintain my physique and all. Yeah, of course you can go. Right. Sir, can I get any used vehicle an auction to me, sir? Car is there for the company's need, for the company's purpose. Sometimes later it's old. The company management decided to discard that. Immediately apply demand, sir, will I take it for a discounted price or cheap rate or free of cost? You can take it. Free transfer of any of the assets of the company. Or company's assets are allowed to be used by the employee for his personal purpose. Okay, company has a car or some vehicle, two-wheeler or some furniture. Employer provides those furniture for his personal purpose. Will it be okay? Yeah, of course. Also will fall under fringe benefits. All these things anyhow will be calculating some value, and that value will be considered as per case it's taxable. Except mobile and telephone. Except mobile and telephone. These are not considered for taxation purpose. Okay. Clear? Now let's start with one after one. I'll directly go for completing the fringe benefits now. Small topic, leaving one aspect, we'll try to finish up all these things today itself. Fringe benefits. And 1 and 2, rent-free accommodation is the time-consuming one. And 7th one, superannuation fund calculation will also be time-consuming one. The rest of the things are just like that, we can finish up. So we'll try to finish up the fringe benefits, at least a portion. Now, so a list of fringe benefits are there under section 17 class 2 subclass 8. Fringe benefits is always taxable to all categories of employees. Employees are categorized as specified employee, non-specified employees. Right, who are you are? These all perquisites will be, your fringe benefits will be taxable. How can I classify the employees as specified and non-specified? We'll study that separately later on, along with section 17 class 1. Okay, so 17 class 2, that first one, subclass 1, rent-free accommodation provided at concessional rent. So along with that, we'll study the specified employee classification. Now, these fringe benefits are taxable. So, free meal, gift voucher, traveling, touring and accommodation, cost of credit card, club membership, use of movable assets and sale or transfer of movable assets. All these things are taxable. Any others not falling under the above list other than telephone and mobile is also taxable. Okay, before we study in detail of all these things, let me finish up all these things in nutshell. Okay, in case of free meal, if the value is less than or equal to 50 rupees per meal, okay, the cost, free meal, it's not allowances. Allowances is always taxable. Free meal is given, that value is less than or equal to 50, then fully exempted. Gift voucher, any gift voucher for honoring his continuity of service for 5 years, or some family get together, some birth date and achievement, any gift voucher is given, not in the form of cash. If the gift voucher is less than or equal to 5,000, then it is exempted, else taxable. Cost of credit card. Credit card is in the name of company allowed to use to be used by the employee for the official as well as personal purpose. For that credit card, year on year they charge around 10,000 rupees. This is called credit card charges. Okay, whatever the official purpose expenses, no, he just swaps the card and makes a payment, and it's company's duty, no problem. But sometimes he uses the credit card is for personal purpose also. For the personal purpose, of course, he pays his own money, no problem. But there's a charges for credit card, maybe 10,000 rupees. In that case, for the personal purpose, you have to calculate what is the charges applicable, probably around 4,000, maybe personal purpose. If this personal purpose credit card charges is paid by the employer, then that will also be considered as perquisites, credit card. Taxable all employees if used for personal purpose. Is that okay? And club membership is always taxable. Is always taxable. Is that clear? So in case of free meal, up to 50 rupees is exempted. Beyond that is fully taxable. In case of gift voucher, up to 5,000 is exempted. Beyond that, fully taxable. Okay. If the gift voucher being 4,500, fully exempted. If the gift voucher value being 5,500, you have been given the gift voucher. Using the gift voucher, you are allowed to purchase some electronic gadgets in a showroom. You go and purchase the electronic gadgets. The electronic gadgets may be 6,000 rupees. The gift voucher worth rupees 5,500. You just surrender the gift voucher and pay additionally another 500 rupees to purchase that. That's how the gift vouchers are there. If the gift voucher value being less than 5,000, fully exempted. If it is 5,500, fully taxable. Exactly up to 5,000. Two angles are there. If the gift voucher being 5,000, 4,500, okay, fully exempt. If the gift voucher being 5,000, 5,500, as this value is more than 5,000, then what happens? We have two angles. One is fully taxable. Fully taxable. Another one is partially taxable. The amount in excess of 5,000, that 500 only taxable. Two angles are there. Currently, we follow this one in all the scenario. Okay. If the value is more than 5,000, fully taxable. If it is less than 5,000, fully exempted. Clear? So there is another approach. If the gift voucher value being 5,500, up to 5,000 is subtracted, beyond that only will be taxable. This number is pretty sure. You can apply this anyway. In the subsequent lecture, I will explain in detail along with the education loans, not here. Okay? Education facilities. Right. The same applicable for 50. If the food value is less than 50, fully exempted. If it is 55, fully taxable. The another approach, up to 50 is exempted. 55 means only 5 rupees is taxable. That another approach. But you stand with which approach is better. This approach is better. Clear? Clear. In CA, they have given both options. Okay? Both options. Either you can follow this one or this one. No problem. But stick on to this. Stick on to this. Clear? Stick on to one method. Club membership fully taxable. Now, if any employer's assets, movable assets are given to you for your personal use, on that original value with the 10% will be taxable value. Okay, perquisites. If furniture is given, check what about the original value of the furniture, maybe 1.5 lakhs. On that 10%, 15,000 will be taxable value per year. If you are using only for half year, you have to take half year. But if the movable asset is hired by the employer, then what happens? The higher charges will be the perquisites value. It will be considered as your salary. In all the cases, any amount recovered from the employee by the employer for providing this one, that will be deductible minus amount recovered if any. This is the default one. Amount recovered if any. Apart from that, whatever the balance you get, finally, if it is negative, then you can simply omit it. The facility, the original value of the furniture being 1.5 lakhs, the perquisites value should be, if it is allowed to be used by the employee, then the perquisite value being 10% of the original value, 15,000 rupees. But employer demands to pay some amount, probably you pay around 5,000 rupees. So, the perquisite value is 15,000, but it is not given free. A small amount is required. The small amount being 5,000, that 5,000 is subtracted, balance 10,000 is taxable. If the amount recovered being 20,000 rupees, what happens then? Ignore the negative value, nothing is taxable. Is that okay? So I have covered 5 aspects. Free meal, less than or equal to 50 is exempted. Gift away voucher, less than or equal to 5,000 is exempted. Credit card facilities used if the facilities are used for personal purpose, and charges on that will be taxable. Any club membership, health club, and wherever it may be, he wants to join, then also be taxable. Movable assets are allowed to be used by the employee, then it's also be taxable to the extent of 10% of the original value if the asset is owned by the employer. If the asset is hired by the employer, then higher charges will be considered. Once you calculate the value of taxable amount, from there any amount recovered is subtracted. So balance is the ultimate amount taxable. If the ultimate amount being negative, it should be ignored. Let me try to finish off 3, 4, 5, 6, 7. All these things attested in detail in this class itself, right? So now, traveling, touring, accommodation at any other expenses on holiday. Okay, travel, touring, accommodation. Okay. Actually, if it is allowable to all the employees put together uniformly, then it is exempted. Else, it is taxable. Okay. So, employer takes all the employees for a outing, tour, traveling, touring, accommodation. They arrange for 2 days stay outside their working location. Is that okay? In corporates, no? They usually take all the employees for an outing. Probably they will arrange a star class hotel and freak out to stay 1 or 2 days outside, right? If it is uniformly allowable to all the employees, that will not be taxable, fully exempted. Fully exempted. Or employee visits for official purpose. Okay. Touring for official purpose. For that, he needs to spend for what? He needs to spend for what? Okay. Fare, bus fare or train fare, whatever it may be. Okay. And accommodation and food and other things for the stay period. Stay period. Is that clear? Bus fare may be 1,000. Accommodation cost, bus fare being 10,000 rupees for to and fro, bus or air fare, whatever it may be. Accommodation, they spend around 10,000 rupees for 5 days. Food around 5,000 rupees for 5 days. Okay. This is for the employee. And he goes outside the city, right? So he wants to take his spouse also along with. Employer says, okay, I'll spend for that also. So employer spends 10,000 rupees for employee's spouse, accommodation bill for 5 days, and food for 5 days. So now what happens, this tour is not for personal purpose, only for official purpose. Though it is official purpose, accompanying Mrs. Employee is not official purpose. So this value will be always considered as taxable perquisites. Clear? How much is that? 10 plus 10 plus 5, 25,000 is taxable perquisites. What about in this scenario, sir? Employee has completed the job in 3 days. Another 2 days he just spends in local visits for shopping and other thing. This is official, this is personal. Then what happens, Bus fare, no problem. To and fro only once you are going to spend. Whether he extends the stay or not. But accommodation food increases only because of the 2 extended days of stay. That will be considered as taxable value. For 5 days, 10,000 means for the extended 2 days, 4,000 accommodation bill will be taxable. Food 5,000 for 5 days means per day 1,000 rupees. For the extended 2 days, additional 2,000 is spent. Right. 6,000 will be taxable. So overall taxable perquisites in this case is 31,000. Is that clear? The facilities are maintained by the employer and not available to all the employees uniformly. All the employees are available uniformly exempted. Else taxable. The value at which such facilities are offered by other agencies to the public, if it is being the own source, okay, the tour and travels arranged by the own source because they themselves have the buses and other facilities. offer the employees to use their own fund, own facilities. So there is no value. In that case, what usually we charge for the outsiders will be considered as perquisite value. Number one. Official tour is extended as a vacation. So here official tour, he has taken 5 days, but out of that 3 days may be the official tour, 2 days extended as personal. For the 2 days extended days, you know what could be the value you have to calculate, the way how we have calculated, that will be taxable. If any member of the household accompanies, he doesn't go, he himself, he takes his own spouse or family members or household. Household means whoever it may be residing along with him, maybe even servant, household. Then employee on the official tour, the value shall be expenditure incurred on such member of household. This one will be taxable. Is that clear? This is the third point. This is the second point. The first point is also, we have studied this one. Clear? Above rules are not applicable to LTC. LTC is totally different. Leave travel concession is different. We'll study that separately later on. Right. In case of free meals, meals cost up to 50 will be exempted, and tea, coffee and non-alcoholic beverages during the working hour also exempted. Our food is provided during the working hour in a remote area. Remote area means almost 40 kilometers away from town. Don't have any good facilities for food and other things. Then employee always demands, sir, if there is no food, then I will not come. In that case, during the working hours, employer may have their own canteen to provide the food for them. In that case, the 50 rupees or 70 rupees is not a matter. Any number will be a matter. Not a matter, it's exempted. 40 kilometers away from town and the population in that particular locality is less than or equal to 40,000 rupees. So, first condition. In this first condition, exempted. Tea, coffee and non-alcoholic beverages during the working hour also exempted. Meals also exempted during the office hour provided the value is less than or equal to 50. Meal cost excess of 50, then that will be taxable, less amount recovered. Available only if shifting out of the default tax regime. So all these things are available only in option, not default tax regime. Second point over. Third point. Valuation of gift vouchers and token. 5,000 is the limit. It should not be encashable in cash. Okay, it should not be convertible into cash. Okay, convertible in cash should not be. If the gift voucher is 4,500, using the gift voucher, you can purchase any commodity or any asset or any electronic gadgets like. But if you are able to convert that into cash, then fully taxable. In excess of 5,000 is always fully taxable. If it is less than 5,000, it should not be convertible into cash. You can purchase any commodity for your requirement using that, then okay, allow. Krish, an employee of Beautiful World Limited, was presented gift voucher of pantaloons amounting to rupees 7,000. So, pantaloon, what's that? Definitely dress and garments. Automatically, what happens? It's only in the form of kind goods. Okay, not in the form of cash. Okay, this condition not satisfied. So, it will come in this case. On the occasion of his marriage, discuss the tax liability. Okay, so automatically what happens? It is more than 5,000, definitely it's taxable provided at the time of marriage, if he gets no, that is fully exempted. Why? Gift at the time of marriage is fully exempted. We'll study that along with the income from other sources chapter later on. Here you just understand, at the time of marriage, whatever the value you get, no, fully exempted. Is that okay? During the marriage, you will study that in detail. Apart from that, any other case, only 5,000 is restricted if you are getting the gift from the employer. Would your answer differ if the same was presented to Chris on the occasion of her first marriage anniversary? Marriage anniversary is not coming under this case. Only at the time of marriage, up to any limit is exempted. Thereafter, the limit is the 5,000 only. Clear? In this case, taxable. In this case, exempted. Fully exempted. Clear? And in case of club, okay, if the club cost, employer makes a payment to some country club and some other club, where employee comes and enjoys here. Is that okay? He uses this. Okay. The payment. This club membership is in the name of employee. Payment is made by employer. This employee can go and enjoy the facilities. Okay, probably employee A. Employee A can go and enjoy the facilities of the club. Okay, country club. How many have heard about country club and all? Lots of clubs are there. Huh? I just forgot one club. The membership fees around 2 to 3 lakhs per year. In some cases, no, recommendation should also be there. Strong recommendation there to join. After the strong recommendation, you have to pay 10 to 15 lakhs as joining fee, and thereafter monthly 2 to 3 lakhs. So we are in the level of thinking how to get 2 to 3 lakhs per month, per year. They are thinking how to spend 3 to 4 lakhs per year. Huh? So that's the lifestyle. In those country club and all, no, the membership fees is very high. Employer offers that payment on behalf of this A. Now, whether this membership payment made by the employer on behalf of A, no, is for official or personal. In case of personal purpose, taxable. In case of official purpose, exempted. How the membership fee may be official, sir? Mr. A may be in marketing executive. To sell the high-end products, he needs to have the connection with the high top-class people. How can you approach a top-class people who is having the net worth 2 crores or 3 crores or 10 crores like? Unless they have the net worth 10 to 15 crores, you cannot tap the business. If you want to sell a flat worth rupees 5 crores, will you be able to sell that 5 crore rupees worth the flat by just giving the flyers notice in the road? All these things are waste. And the rich people will have around 30 or 50 crores net worth can accommodate to purchase this one. But they don't come in the roadside. You don't find them in the roadside. Where they will go? They will usually go for the high-end clubs. So this marketing executive says, join me in that club or I'll mingle with them, then I can promote the product. So then it's coming under official. Is that clear? If the membership fees is paid for the official purpose of the employee, then exempted. If it is for personal purpose, exempted. Totally taxable. But in case of corporate membership is nothing but TCS company becomes member with the country club by making a payment. Who is the member here? TCS is the member. The company is the member. And any employees of TCS can now enjoy the facilities of country club. They directly go to the club stating that I am the employee of TCS, so showing the ID, they can enjoy. TCS will make a complete package payment for, sir, we have around 1,000 employees with us. We'll pay around 100 employees membership fees here. Any employees may come to your office, in your club, they can enjoy. You don't disturb them. So they just show the ID and they'll enjoy. Then it is called corporate membership. Who is the member here? Company is the member. The employees, because of being the employee of the company, can enjoy the facilities called corporate employee, corporate membership. Then it is completely exempted. So club cost taxable all employees. Okay, not taxable if the membership being the corporate employee membership, or it is for the official purpose, or it may be health club, sports, and similar facilities provided uniformly to all the employees. In those cases, not taxable. No, those cases not taxable. And use of movable asset, except computer and laptop. If the movable asset is owned by the employer, 10% on the actual cost, original cost will be the taxable per case its value. If the movable asset is hired by the employer, then higher charge, that rent is taxable per case its minus amount recovered. Okay. Now let's try to solve this illustration. So with that, all the aspects are going to be covered. Right. So 5 aspects. Free meal we have completed. Gift vouchers we have completed. Credit card also be very simple. And club membership just now we completed. Okay. And use of movable assets. So these are the 5 fringe benefits are going to be completed. So 5th one or 7th one as per this list, use of movable assets. Let's see. Mr. Prabir Nandi is a manager in H Limited, gets salary rupees 30,000 per month. So complete gross salary. So salary being, basic salary being 30,000 per month in a year, 3 lakhs. 60,000. He is also allowed free use of computer, video camera, television of the company. Computer is just forget. So, in case of computer, free use. Okay. Number one being computer. In case of computer, nothing is taxable. Okay. Number two, video camera. In case of video camera, who is the owner of this camera? Nothing stated. We assume it's owned by the employer himself. Then 10% will be considered as taxable value, 3,000. Written down value, video camera for 30,000. Their written down value on 1/4/24 is 60,000 and 3,000 respectively. Hmm? I don't get it. What? Yeah, blanks to the company. Okay. The number 60,000. Okay. 60,000 for computer, right? 3,000 for video camera. Any of computer is not considered. The 3,000 video camera, we have to take only the actual cost, not the written down value. Okay. Television set has been taken on lease rent at rupees 100 per month. So, third one being TV. TV is taken on rent, then rental value will be the per cases value, 100 rupees. Okay. So, 100 into 12 months, 1,200. And the employer recovers 500 per month for use of these assets. So, minus amount recovered. Minus amount recovered. 500 per month into 12 months, 6,000 can be subtracted. So, the ultimate value of this one being 0, negative. So, you make it 0. Then taxable value in this case being 3,60,000 as it is, gross salary. From there, you can subtract standard deductions and all, right? Hope now you'll be able to understand these 5 aspects. These 5 aspects are very simple concepts, so I completed all these things at a shot. Okay.